Hey, everybody, Jordan Adler here, the host of the Beach Money podcast. And we introduce professionals that have a residual income, that have the lifestyle that a residual income can provide. And today I have my newer friend, Carlos Millsap, on with me. Haven't known Carlos for very long. We met, believe it or not, at the beach at 7 o'clock in the morning at a little breakfast place where they have a little outdoor cafe that I've been visiting for years. And I was actually all packed up. I had my bags and I was there. I just ordered some breakfast and was getting ready to grab an Uber and head to the airport. I mean, it was 7 a.m., something like that. And Carlos was sitting next to me and we ended up in a conversation. I don't even remember how it started, but next thing you know, we were talking about entrepreneurship and he was telling me a little bit about what he does. And he's got a very uh, creative investment strategy that I've been using for like 28 years, and most people don't know about it, and it's really powerful. And we just hit it off and had a great conversation. And here's a guy I just met, and he offered to take me to the airport in lieu of jumping into an Uber, and I said yes. And it's very rare that I would get in an Uber with a strange guy that that I've never met before from the beach, but it was probably a first. I haven't done that, I don't think, in many, many, many years. So, but he's a great guy, and I'm enjoying getting to know him. He's an investment advisor and an insurance expert. And I think I'll just start, Carlos, by asking you to talk a little bit. Well, first of all, what was your experience of that morning? And then if you could talk a little bit about how you got started and where you are today, how you got to where you are today.
Okay, well, great. Well, Jordan, first and foremost, it was a pleasure meeting you. And so on that particular morning, typically on Saturday mornings, I walk down to that location from about 2.5 miles down. But on this day, I had another engagement because I walk with my dog. You notice I didn't have my dog with me.
Right.
But on this day, so I said, you know what? I'm going to go there anyway and just have breakfast and coffee. So it was a rare day for me to be there without my dog and fully dressed because normally I'm in my workout clothes. But I had an engagement with the football. Because what happens is I was called a playoff director for local high school football games, and so I just happened to be there, and we struck up a conversation, and not many times do I get a chance to strike up conversations with people, but there was something that was um, different about you, you
Mm.
know. And so we had a good. I can't remember the conversation that we had, and when we got into certain topics, and like you, I don't authorize to people, but there was something I saw your bag and said, hey, this guy's headed somewhere. I said, let me just go ahead and offer him a ride. So, you know, that's how that happened. But, I've been in the financial services industry now, um, well over 15 years. I've been in the field of finance, for close to 40 years, of one form or another. I've helped, people in many different facets. So, I wanted to, begin to help people with something that can help them in no matter what times that they're in.
Yeah.
And that's how I got into this particular industry.
Now, what was it? What was it? So the thing that really got you interested is you wanted to help people. But
Correct.
uh, tell me a little bit about how you got started in it. Did you meet somebody? Did you do some research? Did you go to a training program? Like, what was it that got you really launched into the business?
Okay. So what happened is that, I was in the mortgage industry for a long time. And, 2008 kind of wiped out most people. And I was I was in this industry, and I sort of had a feeling that I wanted to get into something that was where I could really help people, and I didn't have to worry about the stock market going up and down, and me losing clients because the rates were too high, or because of this or that. And I began. I had purchased some CDs, and I started hearing of terminology like cash value life insurance. I start hearing of arbitrage and things of that nature. So I decided at that particular point to seek out on my own to get my life insurance license.
Mhm.
And so once I got my life insurance license, I didn't really know what I was going to do with it. So I end up, initially um, working in the finance expense industry, but I didn't really like it.
Mm.
And so
Is that
I ended up
structured?
talking to
Is that structured settlements? Is that what that is, Carlos?
no, well, no, what that is, it's what happens is that as people get older and they want to make sure that they have enough money to take care of their final expenses for burial purposes
Ah,
and things of
gotcha.
that, that's what that take care of. And I don't really like that industry. I found that out really quickly because what I really wanted to get into was the money side because I knew of the money side, but I didn't know it of anyone. But then because of me being in the financial, or excuse me, being a final expense, I came across this gentleman who happened to be a pastor of a church, and he began to talk about, the cash value life insurance policies, and I was like, this is what I've been looking for, and so, um, by having a conversation with him is how my journey as far as financial services is concerned began because, he was my entry. And like I said, he was my entry because even with his particular company that I got involved with, I wasn't with them very long, but it was a door opener. It was something that actually helped me to begin to understand that, life insurance, and this is what people don't realize, life insurance is not just about somebody dying or having money just in case somebody died. If that was the case, it would be called death insurance, right?
Mm.
So it's called life insurance for a reason because there's more benefits and more um, ways in which you can use it while you're still alive.
Yeah,
And that's when I began.
Carlos, most people, when they think of life insurance, they either don't want to talk about it or they're bored with it, right? But
Correct.
I love cash value life insurance. I am like excited about it, and there's a reason I am, and it's a viewpoint that many people have, but not very many people know about. And I want you to, I don't want to turn this into a sales presentation, but I do want people to understand the concept of infinite banking. And that's where we really started when we talked at the cafe on the beach. Because I've been doing infinite banking now for 28 years. I'm still in touch with the woman that set me up on it. And I'm so grateful because out of the uh, probably 40 plus investments that I've made over the course of my career, anywhere from, $10,000 all the way up to $1 million. Uh, by far, my cash value life insurance is my best investment, my best lifetime investment for so many reasons. Would you talk about infinite banking and what it is and what it does for people and who needs to do it?
Abs-
Yeah,
Absolutely. Infinite banking is, I got to say, the eighth wonder of the world.
it is.
And what people realize is that, because there's some people out there, some edutators out there that will talk against, infinite banking. But I'm here to tell you that they don't realize the power of it. Because there's a gentleman by the name of R. Nelson Nash. He basically coined the phrase infinite banking, but it gives you the power to use what is called uninterrupted compound interest. When you put your money inside of a bank and you pull that money out of the bank in order to make an investment or to make a purchase, the interest that you're getting on that money is interrupted.
Right.
Okay. You don't get money, you do not get any interest on that money when it comes out of that bank. However, when you put your money inside of a life insurance policy, and this is what's so key, what you understand for the last 20 years, when you take that money out, and people, let me tell you something, when it comes to life insurance policies, there's three ways in which you can take your money out. There's a smart way, there's a dumb way, and there's a sad way.
Mm,
Well, the smart way is by taking out what's called a policy loan. A policy loan is not like a consumer loan. You do not have to credit qualify. You don't have to have any good credit. You don't have to have credit at all. Matter of fact, you don't even have to pay it back if you don't want to.
right.
Okay. There's a dumb way. The dumb way is closing your policy and withdrawing your money. Reason why that's dumb is because now that money is taxable.
Mm.
Okay. And the sad way, of course, taking money out of life insurance is by dying. And nobody wants to do that. They get money out, right? Of course not, because that means that you're not benefiting. But so this infinite banking concepts allows you to be your own bank. It allows you to control your money. It allows you to be able to put certain amounts of money inside the policy, pull that money out, and while you're pulling that money out, you're still getting interest on that money as if it's still there. Wow. It's still getting interest on it. Okay. So now you can take that money and you can put it somewhere else. And then if you want to, once that money made the money that you wanted to make, you can put it back in a life insurance policy. And you know who the biggest purchasers of life insurance is?
Isn't it the
That's
bank?
right.
The banks.
You're right. It's banks. If you go to FDIC.gov, you will see your bank, people's bank, your bank has probably about 50% of their asset is life insurance policies.
Yeah. Yeah.
So
So
I'm
most
sorry. Go
people,
ahead.
yeah, most people look at life insurance policies as a death insurance policy. It's like if I die, there's a payoff. And that's an important thing to have for your family. But this is a way to take your money and have it provide multiple functions. And again, I want to really emphasize that when you borrow that money, that's a tax-free event. You're not when you put the money against the policy, and you mentioned you don't have to pay it back. The reason is because if something were to happen to you, your life insurance policy, your death benefit would pay it back. So you do
That's
want
the
to pay it,
latter. That's
but
correct.
and it continues to grow at the same level versus like you say, if you pull it out of a bank, that money now is not growing at the same level because you've pulled the capital out of your investment or whatever investment that is. So, man, it's been so good for me, Carlos, over the years. I've done so much besides an equity investment in 30 multi-million dollar homes, which was a $500,000 investment. That was from my life insurance. I've bought sports cars. I've taken major trips around the world with it. You can do anything. And then over time you pay it back. And if you want to, you do. And then you can go around and do it again. And I've got so many things, artwork, jewelry, different things over the years. So yeah, it's a phenomenal investment. And so what could people learn today? So before we go there, I want to talk about who. Like it's not for everybody, but who would be a good give me a demographic of somebody that would be a good qualified person to participate in this type of investment and maybe somebody who wouldn't be.
Okay. Well, I would say that anybody that have large sums of money that are investing their money in various places, the first place that if you just switched and just did this one thing before you make your investment, put your money into a life insurance policy first. Then you can
Mm.
take the money out of the life insurance policy and make your investment. I have, people that are purchase real estate. They put large sums of money inside of their life insurance policy first. Then they pull the money as a policy loan, and then they make their purchase. So we call, there's some people that call this an and asset because, when you put your money inside of a life insurance policy, it's really not an investment because an investment means that there's a probability of risk, a probability of loss. So your principal is never at risk when you put your money inside of a policy. And plus, the other thing is that when you put your money inside of a policy, you also have the ability to take advantage of arbitrage, which basically means that the interest that you're getting on the principal money that you put in is typically higher than the interest that you'll be charged on the policy loan. Therefore, you're getting, and that's why
Mm.
banks do it, because now they're getting interest on the money that's still with the life insurance company, and it's higher than the interest that they're paying on the loan. So you're actually getting a return on interest or getting return on the money that you borrowed, so to
Yeah.
speak.
Yeah. Now, does
So, so,
your
so I'm sorry. Go ahead.
does your business produce a residual income, a passive income?
Well, my business, when I talk about in regards to, um, uh, when our business is mainly transactional.
Right.
So we do have a part of it that we can get trails if we choose to do so, but more than like most of the time it's an upfront. It's not residual.
Okay, got it, got it. So I just actually I always believed that in the insurance business there was a residual component as people continue to stay with you. Does that is that not there anymore or
It's there, but it's very, very
very
small. It's very
small?
minimal. Oh, yeah,
So what is your exit strategy or do you have one?
well, my exit strategy, fortunately, with the organization that I'm with, it has allowed me. Well, there's two things. One is that I'm connected with you on on um, on a new project that I'm working on, but unfortunately, this past summer I became what's called an equity partner in my company,
Hmm.
and what that basically means is that in 5 years, the company is going to start paying out to me as one of the equity partners based upon the overall cash flow of the company. So I
Right.
get a percentage of everybody does in the company.
There you
And
go.
not only do I get a part of it, but that will be passed on to my legacy, to my family
Right.
members.
So there are a
So
lot of ways to create a passive income. This is one way that Carlos just described. So and the most important point here is that he has one. He has an exit strategy. He has a plan to passive income. One of the things that I did, Carlos, is I pulled $1 million portion of my policy, and I purchased a lifetime annuity. I'm 67 years old, so I was able to buy an annuity, and it's a significant amount, six figures a year, that pays me every single month for the rest of my life. And that is a form of beach
free,
money. What?
tax free, right?
Tax free. That is a form of beach money. And I did that through the infinite banking. So this is a topic that you don't hear about very much. You don't talk, but people that have a lot of money, they know about this policy, this strategy. So, and
Absolutely.
just to kind of go off on the side of being a business owner, what could be in general? This is not specific to the infinite banking or anything like that or the life insurance, but what in your perspective, could people learn today that's holding most of them back?
Especially when it comes to life insurance, is that their mindset. Unfortunately, there's a couple of, like I said, financial entertainers that people follow, and they listen to them, and they do not understand how life insurance really work. And and there's those who have went past that. Let's if we look at such Jim Harbaugh. Jim Harbaugh was coaching at University of Michigan, and he had University of Michigan get them to put $14 million into a life insurance policy for him over a period of 7 years.
Mm,
So what does that do for him? That will give him a tax-free income for the rest of his life. His money is able to grow tax deferred, and he's able to pull money out tax-free. So what people have to understand is that when you put your money in certain plans, all your money's in a taxable bucket, and that can hurt you down the road. When you're putting your money in life insurance products, if you put it in there the right way according to the IRS laws, you have the ability now to put your money into a tax-free bucket. And one thing, Jordan, is that years ago there was this commercial by E.F. Hutton,
uh-huh.
and remember that commercial?
I do.
The commercial
When
E.F.
EF
Hutton
isn't it
speaks.
when EF Hutton speaks, people listen or something like that?
Correct. What people didn't realize is that E.F. Hutton was a stockbroker, and they thought he was talking about stocks. At that time of that commercial, E.F. Hutton was talking about life insurance,
Ah,
because E.F. Hutton, they were putting more money into life insurance policies, because back then, back then, you could have a $50,000 death benefit with $100,000 cash in it. So you're getting a tax break on that $100,000 and you're getting a good return on it. So there was a lot of people, they were pulling their money out of stock brokerage companies and they were putting their money into life insurance policies. So the IRS got wind of it and said, "Hey, E.F. Hutton, what you're doing is wrong." They said, "No, it's in your tax code,"
Yeah.
and so the IRS took E.F. Hutton to court and E.F. Hutton won. So since the IRS lost, guess what the IRS did?
Mm.
They changed the laws.
Oh,
But
wow.
it's still a good thing,
Yeah.
they just don't want you if you allow a policy to become what's called a modified endowment contract, it's the money becomes taxable now. That's the
Ah,
only thing that really changed, but there's still ways in which you can put your money inside of a policy, let it grow, tax deferred, and then pull that money out tax free. The greatest thing, I mean, once you learn how to do it, you know, as you've mastered it for the past 20 years, this thing is I mean, it's a gift that keeps on giving.
yeah. It's one of those things that does require some time, not personal time, but timeline. Like you gotta have a few years, to allow it to grow. So, this is something that you could set up for your kids, get your kids involved. For their future. By the time they're 20 or 30 years old, they got a whole bunch of cash value in their policy. And that's it's gonna benefit you as well. Let's shift gears a little bit here, Carlos, and talk about what advice would you give to your younger self? Like if you were to go back to when you were 8 years old or 10 years old or 15 years old, what advice would you give to yourself?
Well, if I can go back to, let's say, when I was 19 years old,
Okay.
I had a gentleman that talked to me about just
Yeah.
this, you know, putting money in. We're talking about that's going over 40 years ago.
Right.
If I would have got one of these plans when I was, 40 years ago, I would have done it. But what happened is that I didn't do the research that I should have done back then because we don't have the access. We didn't have the access of the research that we have today. But if I was to if I could go back, I would say, hey, if you're just going to put $100 per month and just do it now because 40 years later, that's going to be you know humongous because of compound interest.
Hmm.
So I would have told my younger self about compound interest. I would have told my younger self about arbitrage. I would have told my younger self to really utilize um, the life insurance because we have these um, 401ks and 403bs that people put their money into, but they can't touch it. They're 59 and a half.
Right.
But I always tell people, you can't touch it. Well, you better believe somebody's touching it.
Yeah.
So I would tell myself, put yourself in a situation to where you always control your money. That's what you learned, Jordan, and that's why you were so successful, is because you learned to control your own money, and now you're reaping the rewards of it.
Well, you know what it really came down to, Carlos, is I trusted this woman. She worked with me for a year just to educate me on this whole concept that we're talking about. And I didn't pay her any money for a whole year. She spent educating me. And now, we've had this it's almost 30-year relationship. And I'm one of her clients. But it was because I trusted her. And because she gave to me without expecting anything in return. She was just educating me because she wanted to help me. And I stepped out in faith on this thing because I read a couple things that she gave me and read a book that she gave me. And isn't there a couple good books that people could read on this topic?
Oh, absolutely. There's a guy named Garrett Gunderson. He has Sacred Cow.
Killing
Uh,
Sacred Cows, right?
Yep,
Killing.
Killing Sacred Cows.
Yeah.
Right. Yeah. So he has a few good books. There's a gentleman named by Doug Andrew. He has a few good books about it as well. So I would say that there are, I can literally come up with dozens. I have a stack of books down here of all the books on this particular subject that I've read over the years.
Yeah.
And it's a phenomenal concept that I wish Like you said years ago, I wish that, I would have, implemented this plan sooner
Yeah.
myself.
Yeah, Kim Butler, the one, she's written a few books as well. She's the one that introduced me to this concept, Kim Butler, and she's been a very close friend for many years. So, hey, listen, Carlos, I want to thank you for being on with me. This has been really valuable, and I think it's exciting. It's just it's an exciting concept, an exciting strategy that I think everybody should participate in, whether they do it through you or through someone else. What would be a way that somebody could reach you if they wanted to get in touch?
Well, I do have, a couple websites. I have, www.wealthmadeeasyforyou, that's the number 4 and the letter u.com, www.wealthmadeeasyforyou.com. On there, my thing is, one thing that Kim Butler does that sounds really great to me is educate,
Yes.
because, I don't want anybody doing anything without them getting educated on it, because you always need to know. Unfortunately, people put their money into 401ks and things of that nature. They have no clue what they're putting their money into. But this website is a way you can get in contact with me. And it also, there's information on it that will educate you on different concepts.
Absolutely. Well, thank you so much, Carlos. Happy New Year. I'm looking forward to continuing this relationship. I know we've got some exciting things that we're working on together, and I'm looking forward to a bright future. So, everybody, thank you for watching the Beach Money podcast, and have a great year. Talk to you soon.